In this class we're going to look at corporate social responsibility. Now, this is defined as an obligation beyond that required by the law and economics for a firm to pursue long-term goals that are good for society. So CSR, I should say, corporate social responsibility, is the continuing commitment by business to behave ethically, behave correctly. So there is an onus on the business to do the right thing and to contribute to economic developments so as to improve the quality of life of the workforce and their families, the local community, and society at large. So in summary, corporate social responsibility is about how a company manages its business process to produce an overall positive impact on society. So corporate social responsibility means conducting business in an ethical way and in the interest of the wider community. It means responding positively to emerging societal priorities and expectations. For example, when society is concerned about global warming, then the firm should show some sort of leadership or some sort of concern in addressing this. It should make sure that its own processes are efficient and that workers and society know it's behaving properly. So it should be responsive to the concerns of the society and of the wider community. It should be responsive in a sense of doing something. It should be acting properly and seen to be acting properly. It has a willingness to act ahead, and it should have a willingness to act ahead of regulatory confrontation. It shouldn't wait for the government to force it to behave properly. It should do it automatically. It should do it before force is applied. To be truly ethical, to be truly good, we don't need force. We do it because it is the right thing to do. And the company has to balance the shareholders' interest against the interest of the wider community. Clearly, the shareholders require profits, otherwise the business won't exist. But the wider community also have to be catered for, and some of the profits might have to be retained and used to improve training for the workforce, or better working conditions, or meeting environmental standards and regulations. So it's a balance between what the shareholders get and what the wider community gets. All of that could be, I suppose, summarized as saying the company should be a good citizen in the community. Now, the relationship between corporate social responsibility and business ethics. Well, corporate social responsibility and business ethics are linked. Both concepts concern values, objectives and decisions that are based on something other than the pursuit of profit. So CSR and business ethics are looking at something other than profit. They're looking at other issues, not just the profit issue. Socially responsible firms must act ethically. Now, the difference between CSR and ethics. Well, ethics is concerned with individual actions, which can be assessed as right or wrong by reference to moral principles. So we can see ethics as applied to individuals. And we can say the individual is right or wrong according to some moral standard or some moral position we take. So we say people are good or bad or right or wrong according to that. Corporate social responsibility is about the organization's obligations to all its stakeholders, and not just the shareholders. So all the stakeholders their aspirations and their concerns must to some extent be addressed or recognized at least by the organization. There are 4 dimensions of corporate responsibility. Economic one. The company must earn a profit. If it doesn't earn a profit, it won't exist. So there is a dimension. There's a legal one, the responsibility to comply with the law. Society codifies what is right and what is wrong. It writes down what is right and what is wrong, and it gets us to recognize what is right and what is wrong in the legal system and to act accordingly. So the firm must comply with the law. Ethically, it's not just acting for profit, but doing what is right. It's doing what is right and what's just and what is fair. It is not just generating profits. And there should be some element of voluntary and philanthropic behavior, promoting human welfare and goodwill. So it's helping people, it's promoting people and welfare, which is the end game. That's what we're talking about when we are concerned with corporate social responsibility. It's helping the workforce, it's helping the community. Being a good corporate citizen, contributing to community and also to the quality of life of the people in the community and in society in general. So, social responsibility, well, there is a debate. Not all business organizations behave in a socially responsible manner. Some make the profit and get out. Some are criticized for just focusing entirely upon profits. Should the business organizations be concerned about social issues and problems? I mean, is it not the responsibility of the business to make a profit and that is it? If there are wider issues, they should be addressed by the society. That's one position that's taken. Is it the obligation of companies to look after society as well? Or should it just make a profit and pay dividends to the shareholders and salaries to the managers and good salaries to the workers? Should they also be forced, or should they have a responsibility for looking after the environment? There are 2 schools of thought on the issue. The free market view. The job of business is to create wealth with the interests of the shareholders as the guiding principle. So the free market view is make the profit and forget everything else. It is the job of society and of the lawmakers to make sure that society is working properly. Now that's one particular view. The second view is the corporate social responsibility view, which businesses should be concerned with social issues. Businesses should make a profit, but also spend some of the profits on social issues. The free market view, well, the role of business is to create wealth by providing goods and services, to increase its profits, and to engage in open and free competition without deception or fraud. That's one view. That's the free market view. That was the view put forward by a very famous Nobel Prize winner in economics, Milton Friedman. And there are many people from different types of economics, from different persuasions within the economics school, to suggest that it's got its supporters. For example, the Austrian economists would say that the job of business is to make a profit, survive, compete, and there's nothing in there about looking after society or looking after the community. So the free market view is the business looks after itself. So the role of the business is to create wealth by providing goods and services and to increase profit, engage in open and free competition without deception or fraud. Engaging in free and open competition may require lawmakers to be involved, because competition sometimes is not free and it's not open, and there may be an issue there. Likewise, there's a tendency sometimes for companies to engage in deception and fraud. So perhaps the free market view has got many problems, and perhaps it does need external intervention to keep the business on the straight and narrow. So if you look at the view, the Friedman view, to create wealth, nobody would disagree with that. That is what companies do. Increases profits, yes, increase the profits, be efficient. Engage in free and open competition, that's what it should do. But if it has a chance, it'll become a monopoly. Perhaps increase the price in the local area. And deception and fraud, well, there have been many examples of this in corporate history. So, a summary of this. Managers who have been put in charge of a business have no right to give away the money of the owners. That's the view. The managers run the business on behalf of the shareholders. The shareholders are not perhaps involved on a day-to-day basis, and therefore the managers have no right to give away the shareholders' money. So there would be no corporate social responsibility under this view. The responsibility of the managers is to give the profits to the shareholders. And the managers are implied to generate wealth for the shareholders, not to give it away. It's also argued that free markets and capitalism have led to economic and social development, improvements in health and in longevity. The benefits that we see around us have come to us through capitalism. That's the argument. And therefore, why kill it? Why make it difficult? It's the free market view also. To attract quality workers, it's necessary to offer good pay and conditions, and this leads to a rise in standards of living and wealth creation. So people do benefit from capitalism. That's the argument. It's possible to promote yourself within the organization through promotion and hard work and through talent, and individuals benefit from this. Consumers get the product that they're after because the product is sold cheaply and efficiently on the market. That's the view. So there's no onus on the company to provide other facilities or to look after the environment. It's just the onus on the business is to make a profit. So the free markets contribute to effective management of scarce resources. It's the managers look after the scarce resources and put them out into the marketplace and generate profits, and there is nothing there about looking after the community. Sometimes markets do fail, and some regulation is necessary to redress the balance. Regulation should be kept to a minimum, however, since regulation kills initiative and creates barriers to market entry. So it's viewed by the free market people that regulation should be at a minimum so as not to kill off initiatives. Now, the free market case against corporate social responsibility. Well, the only social responsibility of business is to create shareholder wealth. Efficient use of resources will be reduced if the businesses are restricted in how they can produce. The pursuit of social goals lead businesses away from their primary purpose. The primary purpose of the business, it's argued, is to make a profit, not to look after the community or to look after society. And corporate management cannot decide what is in the social interest anyway, because corporate management is too busy looking after the product, looking after the business, looking after production, distribution, marketing, sales, blah, 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 blah. So therefore, it finds it difficult to find out what is the social interest, and who knows what the social interest is, so it can't promote it. So it's wrong to ask businesses to do that. And if it did do it, it would pass on the cost to the consumers anyway. It would simply increase the cost of the business, which would be reflected in higher prices later on in the marketplace. So, corporate social responsibility, it said, reduces economic efficiency and profits. Directors have a legal obligation to manage the company in the interest of shareholders, not for other stakeholders. So, corporate social responsibility would lead to inefficiency and less profit, and it's moving the obligation from the satisfying the shareholders, the owners of the business, to other stakeholders, people who do not own the business. So that's seen to be wrong by the free market proponents. Corporate social responsibility behaviour imposes additional costs which reduce competitiveness. Eventually, companies overseas or elsewhere will outcompete the companies who are trying to be nice, and therefore those companies will close down, and there will be a loss of jobs, and people will be worse off in the long run. And it places unwelcome responsibilities on businesses rather than on governments or individuals. Perhaps the proper place to have corporate social responsibility or have care for the environment or for the community and so on is with governments or individuals, not with companies. Companies are there to make products and sell products. So the free market case is very strong against corporate social responsibility. Now, let's turn over and look at the corporate social responsibility view. Well, businesses don't have an unquestioned right to operate in society. Businesses are in society because society allowed them to be there. And therefore, they have got a responsibility to look after the society. Those managing businesses should recognise that they depend on society. We all depend on society in some way, but they depend on society, and it's necessary to put something back. Of course, the free market people would say, well, they are putting something back in the form of taxation. But this view takes it, you don't just pay the tax, but you also put something back in terms of your behaviour, your ethical stance towards the community and towards society in general. Business rely on inputs from society and on socially created institutions. We do look for inputs from society. The most obvious one from people. And people have to go to schools. And the schools have to educate the people and so on. So there are inputs into the business from society. Education, for example, health, so on. So therefore the business should do something to put something back. Not just pay its tax, but behave ethically as well. And it's argued that there is a social contract between business and society, because each should recognise each other, and the two of them should behave in a way that supports each other. That's the view of the corporate social responsibility school. Now the stakeholder theory, well, the theory suggests that business organisations have responsibility to various groups in society, the internal and external stakeholders, and not just the owners or the shareholders. So this view is that the organisation has got an obligation to the internal and external stakeholders, to the community, to the society, internally to the workers, and even to some of the managers themselves. So the business has got an obligation there. The responsibility includes a responsibility for the natural environment. Decisions should be taken in the wider interest, not just in the narrow shareholder interest. So whatever decisions the company takes, it should integrate considerations of the community, society, of people, and perhaps people who are not necessarily working for the business, people on the outside who would be affected by the business's behaviour. Now let's look at some arguments for socially responsible behaviour. First of all, it's the right thing to do. Simple. Second, it improves the firm's public image. So it's good for the firm, it's good for the company. It's necessary in order to avoid excessive regulation. If the companies do it without the regulation, without the laws in place, the laws won't come into place. They're unnecessary. The people are doing it anyway. They're looking after the community and society and the environment, and they're not being forced to do it. So you don't need the laws. It can be profitable. If companies are behaving responsibly, customers like the companies, and customers will therefore discriminate in the marketplace in favour of the products of the companies who are behaving responsibly. So it can be profitable. And a better social environment benefits the firm. If the environment is bad, if there's social unrest or if there's antisocial behaviour, it affects the firm the same as it affects everybody else. So an improved social environment benefits the firm, benefits the company. And it'll attract investors. The company that is seen to be behaving properly and good is attractive to investors. They'll want to become involved. And the employees will be more motivated. They don't think of the company as greedy, taking all the profits and leaving bad conditions behind. They see the company as responsible. They're proud of their company. They're proud of the reputation and of its standing within the community. So they're more motivated to work for the company. And it can also correct social problems that are caused by business. Businesses can create pollution, or they can cause problems with the environment, and companies that are acting responsibly can help to fix it. Can help to fix whatever perhaps even other companies are doing badly. Some of the companies behaving badly, some companies behaving good, can fix the bad. And so it's again a very positive image for the business. Which takes us to this idea of what we call enlightened self-interest. This is the practice of acting in a way that is costly and perhaps inconvenient at the present, but which is believed to be in one's best long-term interests. Enlightened self-interest means it's going to be costly, it's a problem, it's going to sap up resources, but in the long term you benefit from it. You benefit by enhanced reputation, by people looking at the business and congratulating the business for its efforts in the past, and therefore you'll get more sales, more reputation. The government will be more sympathetic perhaps as well. So there are long-term benefits from acting in this way. Anita Roderick, founder of The Body Shop, she summarized enlightened self-interest as being good is good for business. So if you're good, it's good for business. Now, corporate social responsibility can benefit the firm in several ways. It can help attract and retain good staff, because people want to work for that business. They see it as a good business, it's ethical, it's a proper business, it's a caring business. It can attract green and ethical investment. People want to invest in that business, they want to be associated with the business, people want to support the business. So it enjoys a good reputation. It attracts ethically conscious customers who say this business is supporting the community, it's doing the right thing, it's not destroying the environment, it's being responsible, and therefore the customers like it. And it could actually lead to a reduction in cost through recycling. It could, by engaging in the whole green agenda, perhaps cut its own costs by being more efficient in the use of energy and recycling its products in a way that perhaps cuts its own costs. It differentiates the firm from its competitor and can be a source of competitive advantage. If other firms are not doing it, and one firm is, that firm stands out, and customers see that firm as standing out. So does the community, so does the government. Everyone sees the good firm standing out, and that should give it a competitive advantage. And if it has got a competitive advantage, that can lead to increased profitability in the long run. So in this class we've looked at the free market view, free market argument against corporate social responsibility, and we've looked at the case for corporate social responsibility. So there are two sides that need to be considered when we talk about corporate social responsibility, the for and against. Okay, that concludes this class. Thank you for watching.